See, the chapter is conceptual framework. So what do you mean by framework? First of all, see, this particular F7 book has some 20 chapters. Okay, framed, the 20 chapters are framed in a book. And what's the book's name? F7. Can I say this F7 book which you are studying right now is a framework of 20 chapters? Can I say this or not, please?
Yes, sir.
Yes. So you have photo frames at your home, correct? Some collage ones, like whereby 5 to 6 photos you show your memories with your parents, yourself. That is also a framework. See, why I'm trying to relate this to this particular thing, conceptual framework, is it's a very dry subject, very dry chapter. It's a theory chapter, okay? But we'll try to make it simple. So conceptual framework is nothing but, let's say, concepts, theories, conventions, rules, and regulations, if you want, you can say, practical experience, principles. So all this framed together, can I say it is nothing but a framework of all the concepts? Correct or wrong? Please tell me. All of you. Hello?
Yes, sir.
Yeah. When we frame all the concepts, theories, conventions, rules, regulations, practical experience, principles, everything together, it becomes a framework of concepts. And this framework of concepts, which is nothing but the conceptual framework, is very important to prepare accounting standards, which definitely is to be followed by every accountant. Why the accounting standards are to be followed by every accountant? If they don't follow the standards, they may definitely do some errors. That means they may definitely encounter errors. Okay. So if the accounting standards are followed thoroughly, there is very less chance of the accountants committing any kind of errors. So what I mean to say here is, since conceptual framework is a framework of all these things, these all things are very essential for creation or preparation of accounting standards. Henceforth, they have been used to prepare accounting standards, and the accounting standards, once prepared, every accountant should follow those standards. If you follow those standards, there is less chance of the accountant committing any errors. Why? Because he is thoroughly following the benchmark. Okay. So when you follow the benchmark, less chance of you making errors or committing errors, more chance of you doing the things perfectly. Fine. So this is all about the conceptual framework. Let's go ahead. So see, this theory you can read. Okay. I don't want you to like spoon feed everything. Wherever the practical concepts are there, however, I'm going to explain you. But don't expect spoon feeding for all this theory. You are grown up people. You can read this. Okay. The things I am giving you, I'm explaining you the concepts. You can definitely go to the theory. See, there are disadvantages and disadvantages to having a conceptual framework. They're asking you a question, conceptual framework and gap. See, conceptual framework is a very important thing, and gap is also an important thing. Let us see what are the differences here, and what are the advantages and disadvantages of conceptual framework. See, a conceptual framework in the field we are concerned with is a statement of gap, generally accepted theoretical principles. What is gap?
Generally accepted accounting principles.
Accounting principles.
Principles or practices, correct? So here we have the definition of gap. So here, generally accepted accounting practices. So what do you understand? See, conceptual framework is nothing but, it is just like in this field, it is concerned with what? It is a statement of generally accepted theoretical principles. So definitely this is all about theory. Do you think your purpose will be solved only with theory, or you also want practical?
Practicals.
Of course, theory would build your concepts. Practical would help you to implement those concepts. That the platform will be the practical. See, I teach you everything theoretically, but until and unless I explain you how to implement them practically, is it a use of studying the theory? No,
No,
because
sir.
it's a half study of the subject. Okay. Now, so conceptual framework is the field we are concerned with, is a statement of generally accepted theoretical principles which form the frame of reference for financial reporting. So if you want to study financial reporting, this particular conceptual framework, which is nothing but generally accepted theoretical principles, and these framed together have become a reference for you to do the financial reporting. If you don't study theory, if you don't refer theory, you don't think that you can do financial reports. Theory is important, equally practical is important. If I give you theoretical questions, you see how they twist the questions. Practical questions are twisted, but you understand them easily because some data is present. Theoretical question is purely based upon your subject knowledge or command over the subject. If you don't have the command over the subject, you cannot do theory questions. So please understand, theory questions are very dangerous. Okay. Now, so what did you understand? Generally accepted accounting practices is more into practical, and conceptual framework is more into, these are nothing but theoretical. Please tell me. Principles, and that too generally accepted theoretical principles. Okay. So generally accepted theoretical principles are nothing but worldwide, all the accounting bodies are following these principles to some extent, but the international accounting standards and IFRS which are prepared, they are following. These are prepared by whom? Any clue? These are prepared by IASB, International Accounting Standards Board. So these guys follow this conceptual framework very, very rigorously. Okay. Now, see, the theoretical principle provide the basis for development of new accounting standards. Did I say the same thing? The conceptual framework is very essential to prepare the accounting standards. Yes. The evaluation of those already and the evaluation of those already in existence. See, new standards definitely have to be prepared, or the standards which are already prepared, we can do some amendments or changes to that to form a new one. But for the new one, the old one has to exist. Correct? See, you can't make a building's top floor without making the basement. All of you are following? Hey, all of you, come on.
Yes, sir.
Yes, sir.
Yeah, there are some people here, mum, sitting. So I want them to come out. Now, the financial reporting process is concerned with providing information that is useful in business and economic decision making. Of course, why you make financial reports, boss? You make the financial reports to understand your business performance so that you can decide, or so that the investors can make a decision whether they want to continue with the company or they want to dump it or they want to move away. Why? If the profits are, if the company is in profits, you can continue. If the company is in losses, just move away. Just tell it to go to hell. Now, therefore, a conceptual framework will form the theoretical basis for determining which events should be accounted for, how they should be measured, and how they should be communicated to the user. Of course, you will be learning the theory, correct? You will be learning the accounting theory. That theory or theoretical base is very important for you, because why it is important for you? You will understand what things have to be accounted. Okay, what events? See, what is the difference between transaction and event? Any one of you? You all are accounting students, if I'm not wrong. So what is the difference between these two? Come on, accounting students, 10+2 accounting, BCom accounting, and till now no answer. My goodness. If in interview they ask you a question, what is a transaction event? What will be your answer, boss? See, what on daily basis or on routine
But
basis?
transaction is occurring of an event.
Transaction would lead to occurrence of an event, of course. What is the transaction then? What is a transaction? On daily basis, whatever the routine activities which you perform in your business, like purchase and like paying expenses and all.
Sales.
Yeah, all these are transactions. Monetary, something which is done in monetary exchange. Okay, there's a exchange of money for everything is transaction. These all transactions together would accounted and would lead to events like whether you got profits at the end of the year or losses. These are all events. Okay. So when you come across this theory, now here you will be confused. What is this event? Event is nothing but the outcome of all the transactions. So when you read the theory, you understand what you should account, how you should measure the things, and what should be communicated to user. So when you will be studying accounting standards, I'm telling you 3 things you have to remember always. What you should remember in accounting standard? First, accounting standard teaches you the recognition criteria of things. Accounting standard guides you how to measure things. And it also tells you about, it also gives you guidance about disclosure requirements. Now I am writing something in front of you. You tell me what is this? What is this?
An asset.
What?
Asset, sir.
Asset. So plant and machinery. I asked you what is this? Plant and machinery. This is an asset. Why it is an asset? How will you answer theory questions?
Because it is the thing which generates money in the business.
It is the thing which generates money in the business. Okay.
By which the business
I'm
runs.
writing something here.
Okay, sir.
What are these?
Partners.
Did I say partners? These are
No, sir.
individuals.
Persons.
These are working in a company. They are company's employees. Aren't they assets for the company?
No, sir.
Why?
Because we cannot value them, sir.
Very good. There is no value for all this. We can value their service. Okay. So we cannot recognize them in the books of accounts, and however, only the things which can be measured in terms of money can only be or has only place in the books of accounts. So plant and machinery, you said it is an asset. I'm not denying this fact. And many of you people who have studied your intermediate or your degree, no teacher has given you the definition of asset. If I'm right, correct me if I'm wrong. Because what I've seen is general practices, they won't tell you what is the definition and all. They tell you these are all assets. They give some explanation. Asset has a very fine definition. And if you are good with your standards and if you have good knowledge of definition, things would be strong. You would never go wrong. And the plant and machinery is an asset because this gives future probable economic benefits to the company. Okay. Plant and machinery is owned by the shareholders, controlled by the entity. I've already given these kind of definitions to you, but I am sorry you people have not reverted back now. So plant and machinery are nothing but like these are owned by the shareholders, controlled by the entity, and on this plant and machinery, because this will be used for production process, you will be producing the goods. Future probable economic benefits will flow to entity and then that will be distributed to shareholders. So can I say this is asset? Yes. So this is the recognition criteria of asset. Something which matches with the definition of an asset is always an asset. So first criteria is satisfied. Got it? Under standards, whatever the accounting standards you're going to study, IAS 16 deals with property, plant and equipment. This particular standard tells you how to recognize something as plant and machinery, how to measure them, and what is the basis of disclosure or what you should disclose regarding them. Point number 2, the first thing is done. How will you measure the plant and machinery? Come on, you people are doing the F7 subject for first time. Some knowledge if you have, we can share with you, please. See, you will be see what is this measurement basis? This is my balance sheet. In this balance sheet, definitely this is the asset side, this is the liability side. I'm making T-shape account. Okay. So you definitely understood that plant and machinery is an asset, and that has to be shown in the asset side. Why? Because it is satisfying the definition of an asset. Now I need to write a value for this plant and machinery. Now I need to write some value here, book value, correct or wrong? Some carrying amount. Yes, come
Yes,
on.
sir.
So what? So I'm measuring this plant and machinery on what basis? Either
Market, historic cost,
historical cost or
market value.
revalued or revalued amount, correct or wrong?
Yes, sir.
See, I will come to the details, but for property, plant and equipment, either you should show like initially you should always measure the property, plant and equipment or plant and machinery at historical cost. Subsequently, it's your wish. If you want, you can show at historical cost, or you should show at revalued amount. Revalued amount is what do you mean by revaluation or revalued amount? Yes, Meghna?
The present value of the
No.
assets.
Revalued amount is nothing but after 4 to 5 years. Yeah, something near to what you're speaking.
Value.
This value is a different thing. Absolutely. Like when we asked some engineer to find out the value of our asset after 5 years, he told you bought the asset for 1 lakh. Now you are getting 1,50,000 for that. So this is the revalued amount. Okay. So these are the two ways. These are the two ways at which you can measure your asset. And then comes the disclosure requirement. It is not only for property, plant and equipment. IAS 16 deals with PPE. It is also for IAS 7, cash flow statement. So there also this particular standard tells you what is the cash flow, how you should write the cash flow, and what are the requirements to disclose. Then IAS 2, inventory. This standard tells you how you should recognize something as an inventory, how you should measure an inventory, what are the basis of measurement. Definitely it will be measured at LIFO, FIFO, whatever, and what are the disclosure requirements. So standards are something which will help you to understand the accounts or reporting very properly. Okay, accounting standards, they will help you to understand the accounting properly. Reporting standards help you to understand the reporting thing properly. Accounting and reporting are something different. Accounts is all about preparing the accounts. Reporting is only dealing with the financial reports at the end of the year. Okay. Then comes the disclosure requirements. The disclosure requirements are nothing but something which cannot be written on the face of the statement. Here I wrote plant, property, plant and equipment 1 lakh. Did I write on the face of the statement or not? Tell me.
Yes, sir.
I have written on the face of the statement. Then depreciation. I am just deducting the depreciation and writing the value. The carrying amount is 90,000. But you know, I cannot write everything regarding property, plant and equipment on the face of the statement, like from whom I bought it. I bought from Mr. X. I bought it for value 1 lakh. The depreciation what I'm following is at the rate of 10% straight line depreciation. All these things I will not write the extra details. If I have done some addition to plant, I will not write here. I will show that in disclosure column. That disclosure column is after preparing the statement. There is a footnotes column. I told you that day, go through the Nike's statements, but no one bothered to go for that. Just listen and just don't follow it. Okay, that is good for you. You don't follow, you don't check the statements, and you think you're going to be good accountants. So these are the footnotes. In that there is a disclosure column. I should disclose everything related to this property, plant and equipment. Any additions, any change in accounting policy regarding the change in methods, depreciation methods. So that also I have to explain. So all these things you should mention, okay, under disclosure. So did I explain you what a standard tells you really? Now, will you be able to understand? Will you be able to do the accounting standards easily in the future? Yes, because you understood what standards guide you. Okay. Now, see, as we have started the things here, let us understand something. See, what are the financial reports? What are, see, you are going to prepare the statements at the end of the year. What you are going to prepare under the statements?
So statement of P&L, changes in equity,
Not OCI.
statement of disclosure, disclosing statement.
No, that is all right. You are going to prepare the
Financial
statement of profit or
position.
loss and other comprehensive income, statement of changes in equity, statement of financial position, statement of cash flows. Okay. What are the elements of statement of profit or loss?
Income and expense.
Income and expense.
What are the elements of statement of financial position?
Assets and
Assets and
liabilities.
liabilities.
So assets are defined. Can anyone define a liability?
A present
it is
obligation of a past
Present
event.
obligation.
Okay. Can you just
Where the business owes to the outsiders in future as well.
good. Because of the past events, future obligations are created. It's a liability, and there will be outflow of cash. Okay. Let's come to this. So this is what we are discussing right now. Elements of financial statements. Asset, liability, equity is in the balance sheet. Income, expenses in the statement of statement of profit or loss. Asset, liability, equity is given. What is equity? It is nothing but asset minus total of asset minus
Liabilities.
liability. The residual interest. What do you mean by residual interest?
The remaining
The
value.
remaining or leftover interest in the assets of the entity after deducting all liabilities. Can I say equity is also net asset value? Please tell me.
So,
Yes, sir.
yes, sir.
Liability is done, asset is done, equity is done. Assets, please understand this. See, something I will add with assets. Assets are something which definitely should give you future probable economic benefits. Apart from that, they should be measured reliably. As I gave you an example of property, plant and equipment and Ramesh, Suresh, Hitesh, Jignesh and all Ash. So these guys, can you measure them?
No, sir.
Can you measure their value reliably? No, they don't have value, but you can measure this reliably. So something which can be measured, something which gives economic benefits as well as measured reliably can only be shown as a asset. Liability is nothing but obligation that I have explained. You please read these points and then I'll move forward. So this is done now, future economic benefit and all. And you should always see, when you purchase an asset, you should get the ownership rights, legal rights. Okay. But like if I ask you a question, Mr. A has taken a property from Mr. B for lease. So can they show this as an asset?
No, sir.
No, sir.
Why?
Yes, sir. They will show
Because
lease.
Why? No, then why? Yes, then why?
no,
Yes, because they owe it for longer time
Uh,
in the.
yeah. See, the lease property belongs to Mr. B. Of course, this is asset for Mr. B, no denial of this fact. But this is also an asset for Mr. A. Apart from asset, when this is taken for finance lease, for long-term lease, this is an asset for Mr. A. Along with that, there is a lease liability also for Mr. A. That means they need to pay the lease amounts for a longer period of time, correct? So, in the books of Mr. A, books of accounts, what they prepare, they'll write lease asset and also lease liability. Because this property, Mr. A is taking a 20,000 rupees lease per month, but Mr. A is generating economic benefits from this lease asset. He is generating revenue of 5 lakhs. So is it not an asset for Mr. A under the concept called substance over form?
Yes, sir.
The substance is more important than legal form. Legally, Mr. B can be the owner, but the substance. This particular lease asset is giving economic benefits to Mr. A, not to Mr. B in actuality. So it's an asset for Mr. A along with liability also. Yes. This is done. Provisions. What is a provision? Is provision a liability?
Yes,
Why and how?
because if we want to pay any rent or anything, then we take a provision.
Yeah, see, we just put some money as a reserve. I will not say reserve exactly. Reserves are not,
Cash ex.
yeah, reserves are something for future investment. Provision is prepared or created for some for meeting some obligation. Correct? Many students are very much confused with provision and reserve. So reserve is nothing but what profits you earn, you transfer the reserve for future investments. Out of the cash, whatever reserves or whatever you have, you estimate, you estimate beforehand that this is going to be a future obligation for you, a fixed obligation, which you cannot run away from. So you need to prepare provision to definitely meet that particular obligation. Okay. So
So
provision,
tell provision once again, no?
see, provision is nothing but to pay off some liabilities in the future, some current liability, to meet some obligation.
Okay, sir.
You kind of set aside some amount. Okay, that is nothing but provision, because in future you are definitely going to you are bound to meet that obligation. For example, provision for tax. You definitely have to prepare this. Don't you pay taxes? Don't you want to pay taxes to government for your incomes or earnings?
We must pay, no, sir.
Yeah, if
Yes.
you don't even want, no problem, but you need to pay, of course. So provision, a present obligation which satisfies the rest of the definition of a liability. So this is a present obligation. That means some amount set aside from the business to meet some liability, to meet some obligations of the future, is nothing but a provision. It's a kind of a liability only, because for those liabilities only the amount has been set aside. Okay. Now, so can you just go through this question? Consider the following situations. In each case, do we have an asset liability within situations given by conceptual framework? Give reasons. Come on, tell me. Meghna should do this. Priyanka should do this, and Rajeshwari should do this. Next, Wilson, I'll ask you the next question. Come on, start.
Five years. So first one is asset, sir.
Pat company has purchased patent. Patent gives companies sole use of a particular manufacturing process, which will save this much a year for next 5 years.
We're having future economic
Yeah,
benefits.
it is
also.
an intangible asset. Now, next one, Priyanka. Hello, Priyanka. Are you
Yes,
there?
sir.
Yeah. Okay. Okay. बोलिए प्रियंका, इसका आंसर क्या है? Please tell me.
This is for the future, these things, he has to be paid, Baldwin. So,
Baldwin company paid Don Brennan this much dollars to set up a car repair shop on condition that priority treatment is given to cars from the company's fleet. So, like, did he? Is it an asset or liability?
this is liability, sir.
Liability.
Sir.
So this cannot be classified as an asset because, Baldwin company has no control over the car repair shop, and it's difficult to argue that there are some future economic benefits.
Yes.
So is it a liability? No. Why it's a liability? There is no past contract what they have, na? Based upon which he should give them some. He should kind of he bought some money from someone to start this, or he has taken a loan from someone to start this. It's not his business. He just paid Don Brennan some money to set up a car repair shop on condition that priority treatment is given to cars from the company's fleet. Of course, he will get money from the, that means he's paying some advance money. You can think like that, or he is giving some money to his friend to set up the repair shop so that he gets the first priority, but he is not getting any economic benefits for this, correct? Getting first priority treatment for his,
So,
yeah, please, just a minute, please.
okay, assume like when it is given, they will become a, they may become our receivables, no, sir.
Nothing has been mentioned like this, that they have some contract or he's kind of selling some goods to someone. Receivables are only in that case, na?
Oh, yeah. Yes.
This is just a personal thing. Personal thing won't come under the business account.
Yes, sir. Yes.
If I am giving
Yeah,
some money to my friend, can I account in my books?
No, no.
Can I
No,
assume
yes.
like that then? No, good.
Okay,
Nothing.
sir.
Nice. There should be debate between all you students and me. Good. So he gave some personal amount for car repair shop, just for first priority to be given to him. Definitely, he is not getting any economic benefits out of it. Not his business. Nothing is coming as a benefit to his business. Correct? That car, if got first priority or last priority, it will get serviced. He can use some alternative resources, etc. XYZ. So no asset we can say. And deals on wheels company provides warranty with every car sold. It's a liability. Hello.
So third one, what is it, sir? Deals on wheels?
Deals on wheels is a company. Deals on wheels company.
Liability, sir,
Liability.
because
Yeah,
there
Deals
is an
on
obligation.
wheels company. ये company का नाम है. So definitely warranty is a liability, na? Because they have committed something that if something happens, we would do